Hi, everyone. It's Adrian Pessel. Today's topic is the independent contractor, and I want to cover your financial responsibility to yourself. There's that old saying that says, it's not what you make, it's what you keep. I'd like to add to that by saying it's not only what you make and what you keep, it's how you spend it and where you keep it. So we're going to go over general rules and some ideas for you to take under consideration, but just remember that I am not a tax professional and always seek professional guidance. Let's start out. You may have always been a W-2 employee of somebody, and now you find yourself in a position where you have to now be responsible for your quarterly tax payments, keep track of all your deductions, or maybe you're still a W-2 employee and this is just a part-time gig that you're doing. The most important thing I can tell you is to educate yourself. At the end of this video, I have some suggested reading and also some YouTube videos for you to watch. My goal of this video is to give you some guidelines, but there's a whole lot to learn. Hopefully this will get you going in the right direction. Next step, after you start educating yourself, so when you're done with this video, you need to interview your tax advisors and your financial planners. You want one that specializes with independent contractors and or realtors. Please make sure you do that. There are a lot of deductions out there that you don't want to leave on the table. So we're going to talk about taxes, retirement, daily living expenses, emergency savings, and so forth. So let's get started. The first and foremost thing I want to touch base on is pay yourself first. You've heard that expression probably over and over, but that means you need to put money away in your individual 401k, your SEP, or your Roth. And so what I mean by pay yourself first is this. If you make $100,000 gross, you put $20,000 away in your retirement. So that means you have a net income of $80,000 that you'll be taxed on. Let's say if you're in the 20% tax bracket, so 20% of the $80,000 after you paid your retirement is $16K. If you didn't put money away into retirement, you would have paid $20,000. So there's a $4,000 savings right now that you get to work with that money and not have to give to Uncle Sam. Now, granted, when you retire and you withdraw that money, you're going to have to pay taxes on it, but hopefully you'll be in a lower tax bracket. But even if you're not, you still had use of that $4,000 for, let's say, 15, 20 years. So what I want to show you is this. By delaying the tax, look what happens. If I put $4,000 in this year, then every year after that, I put an additional $4,000 that I would normally have to pay to Uncle Sam. 19 years after that, at 5% interest, by using that $4,000, by delaying it, I just made myself $140,000. That's what it means by paying yourself first. Not to mention the other $16,000 that you put in there that you're going to be making money on, which we're going to show you some numbers how that works as well. So again, you're just delaying the tax payment on the money you make, but you're going to be able to make interest, and you're going to use compound interest to help you gain more wealth. Percentages. Okay, so the question people ask is, how much do I put away? Could be as little as 5%, as much as 20%. And sometimes if you do a defined benefit, you can even do more than that. It all depends on the type of retirement vehicle that you use. But I would say 10 to 20% is a good amount of money that will help you become financially free. So here we go. Let's pretend that we just put $14 a day away. Let's say I'm making 50 grand a year and I'm going to put 10% of my money away. So that's $5,000 and I have an initial deposit of $5,000. And I put $416 away at 5% versus $18 a day at $566, which this roughly works out to be about 15%. So let's look at the difference in money that makes. The difference between $14 and $18 a day, that $4 more you put away, look how much money you will have at the end of 20 years. That is a huge amount. It makes sense to start saving now. Let compound interest really help you. You need to be responsible for your future because as an independent contractor, you do not have a retirement account from some employer. You are your own employer. So like I said before, employer, employee, you're both. You need to pay attention to your tax bracket, your federal and state, and you have self-employment tax. So let's go through what that is. Self-employment tax, that's money that goes towards Social Security and Medicare. It's 15.3%. Traditionally, that's split between the employer and the employee, but because you're self-employed, you get the benefit of paying both of them. Now, don't panic because half of that will be deductible off your taxes when you do your itemized deductions. Quarterly tax payment. Because you're the employer and employee, no one's going to take your taxes out for you. You need to do that yourself. You need to make quarterly payments. That's 4 times a year. You need to make payments to the state and federal government. Here's the federal tax bracket. Most tax advisors will give you your estimates and your vouchers. But if it's the first year you're working this, what you want to do is look at the federal tax brackets, see where your income is going to range from. Know that this is your net income, not your gross. So you have to think of how much money you're going to be deducting. So let's say if you're married and you're filing jointly, if you're making somewhere between 78 on 168, you're going to be in the 22% tax bracket. Every time you have commission check, take 22% if you already know what your expenses are going to be. Remember, you have to do the same for quarterly taxes for your state. This is an example of what the estimate vouchers look like. Now, this is for the federal. You'll have the same one that looks pretty much identical to it for your state, and you'll mail these in. You'll see here, this is due January 2020, and that is actually your fourth payment. That's for the tax year 2019. These, in my opinion, are the 6 top impact deductions that you want to make sure you can make use of if you can. One is your retirement contribution, except if it's a Roth IRA, that's after tax. Your 199A business pass-through, your car deduction, subcontractors or employees. Remember, if they're a subcontractor and you pay them over $600 a year, you need to 1099 them. The 105 medical reimbursement. This is different than claiming your medical insurance. This is an additional deduction that you need to get with your tax advisor to make sure that you're doing it right. But it really means a great benefit to you and your family. And don't forget your advertising and marketing fees. There is a lot of fees that you do to get yourself going out there to get people to buy your listing or select you as an agent. Please make sure you track all of them. There's a list of other deductions that we're going to go through in a couple of minutes, but these are the top ones that you get the biggest bang for your buck. But there's more. So let's go ahead and go through some of these other deductions. So remember, keep track of all your dues, your fees, bank fees, bookkeeping fees, and you can go through these. These are additional deductions that benefits being self-employed. I have a video at the end of this that's going to explain this a little bit more detailed that'll help you out. Save your receipts, keep track of your gas mileage so you can decide which is the best way for you to deduct your car, whether it's by mileage or just a percentage. Talk with your accountant, see what they want from you and see the best way that they can advise you. A couple of these videos that I have attached will make mention of certain apps that I think are very handy. Watch them and I'm sure they're going to help you out a lot. Okay, so we have covered retirement, we have covered taxes, we have covered deductions. Now I want to talk about money markets and CD accounts. And this is for your emergency money. You want 3 to 12 months of emergency money. This is not for I need to take a vacation. We haven't gone out to dinner. This is not what emergency money is for. This is for your car breaks down. And if your car doesn't work, you can't make money. You got a leaky roof. If you don't come up with the cash out of pocket, you can't get it done. That is what your emergency money is for. So you may want to have that in a money market where you get a little bit better interest rate, or you can do CDs and do them in, increments. Like do one, maybe if you have a CD for $1,000 and that's for 3 months. And then maybe you have another CD that's 6 months and that's for like $3,000. As they come due, you either renew them depending on where you are, or you pay off a credit card bill that you had in the meantime you had to use until the CD became available. But most CDs right now, I think my CDs at my credit union is like 2.25%, 2.5%, which is a great return. I don't have to worry about the stock market going up and down. And also there's no minimum amounts like in some money market accounts. You'll have to decide what's best for you and what banks that you belong to, what they offer, but go ahead and research and get the one that gives you the best return on your money. Okay, now since we have a little bit of emergency money, we need to start talking about paying off our debt. You've heard Susie Orman talk about good debt, bad debt. Well, that is true. There's good debt and there's bad debt. Credit card debt is a bad debt. We want to pay that off. I just want to show you a little bit about what's going on with debt in our nation. According to Experian, last year, the average American had $6,500 in balance on their credit cards. Well, that is up 2.4% from the year before, which was only $6,354. You can't be a person that maintains that type of debt. You're wasting your money. That's money you could be putting away. That's money you can be for retirement. That's saving you on taxes. That's money that could be used for a wonderful vacation. You need to start paying that down. Now, granted, if you're already stuck in this situation, well, there's no better time like the present than to stop spending, start paying it, even if it's an extra $20 towards the principal, and it takes you 5 years to pay it off, then that's okay. Move in the right direction. Have a plan. So I want to just show you a little bit more about how debt really takes away from you. Here is what you think you're paying a bargain for. Like I've been at the stores with my kids, and the store clerk says, "Oh, if you open a credit card, you'll get X amount of dollars." Well, that's a great idea if you can save, 10 or 20% off your bill that you were normally going to pay. However, if you're not planning on paying that off at the end of the month, look what that $500 credit card bill is now going to cost you. So $500 at 24%. You pay the minimum for $27. It takes you 24 months to pay that off. You would have paid $114 in credit card debt, and the actual cost for those items is now $614. Let's take it one step further. If you have a bigger ticket item that you want to buy and you don't have the cash to pay for it, wait. Save a little bit more for it. You can delay your gratification just a little bit more. It will make you sleep so much better and will put you in a much better financial position as you get older. Decide to go out and buy maybe new furniture, or you want to do this cruise with your family because it's going to be so great and everybody else is doing it. So you charge $5,000 at 24%. That means your payment's going to be $157 a month. It's going to take you 48 months to pay that off. The interest that you paid on that $5,000 charge is going to be over $2,500. So the actual price that you paid for that $5,000 item, whether it was a couch, living room set, dining room set, or a cruise, is now $7,500. Was it really worth it to put in debt for $2,500 when you could put that money to maybe paying debt off on something else? You need to think and run your business like a business and run your own personal bank account like a business. You don't want to be in the red. Treat your business like a business. Here are some tips for you. Separate your business account from your personal. That means have one credit card for business use only. So when you charge business, you only use that credit card. When you go out with your friends, use a different credit card and pay them off monthly. And if you're at a point where they're too high for that, you can't pay them off monthly, add an extra $50, $20 a month until you can get them down reasonably. Some thoughts are, do you pay the highest credit card off first, or do you pay the one that you can make some headway against? It really kind of depends on your mindset. Another video that's attached at the end talks about this, and it gives you some ideas of which credit card to pay off first. And a lot of it comes down to your own mindset. Next one is use money markets or stagger your CDs for maturity dates. Remember, 3 months, 6 months, maybe a year. Get a brokerage account for retirement, whether it's Fidelity or Vanguard, so you can start your own retirement account. Automate everything. You don't want to leave anything to chance, because when you automate it, you don't have to think about it. The nice part is you get used to living on what's left over. So here I'm going to show you. Let's say you got a $5,000 commission check. The first thing you do, you have these little buckets. This person is doing 15%, so $750 goes into the retirement account, goes into your Vanguard or Fidelity fund. Your taxes, pay 20% goes into your work business account. Then you have your emergency fund. Then you have your daily living, which is probably going to be your checking account. And then I spend $250 a month towards paying off your debt extra, because your daily living is your paying your minimum credit card balance. So if you have like 1 or 2 extra credit cards, pay an extra $125 every month and have it automatically deducted out of your checking account. Do the same thing for your vacation. Have a savings account, and most banks will let you have 3 or 4 sub accounts that you can change money to. I know I have that with my bank at Capital One. So please take the time to set this up. If you have any questions or you need any help, reach out to me. I'll be more than happy to answer any questions. So here's some suggested readings. Automatic Millionaire, David Bach. The Happiness Advantage, Sean Anker. Rich Dad, Poor Dad, Robert Kiyosaki. And then Mini Habits by Stephen Guys. Here's some YouTube videos. The first one is Understanding Your Budget, which I think is a great, very basic way of knowing how money works. Another one is Basic Deductions for Real Estate Agents. And then the third one is the 199A Business Pass-Through. That is the new tax law. That really is a great benefit. And then the 105 Medical Reimbursement Plan video. So I think there would be some really great stuff for you to look at and learn. And then lastly, I think it's a good idea to set up a Google alert and put in topics such as realtor tax deductions or independent contractor or IRS 1099 deductions, or come up with a lot of different terms. And what you'll do anytime there's an article written, could be by Vanguard, could be by Fidelity, it could be by Investor Daily, put it under where you get the news notifications, and you'll read something. And then maybe that might generate a thought in your own head of where you can save some money. Then get with your tax advisor and find out if that works. That is how I've got a lot of deductions that I've done with my tax advisor. Seek the advice of a tax advisor. Make sure that they are comfortable and that they are used to dealing with independent contractors, that the two of you should become a team. If your tax advisor gets mad because you question what they ask, or you bring stuff to them and they have to research it, then you need to find a new tax preparer. So hopefully that helps you out. If you have any questions, make comments below, and have a great day, everyone. Don't forget to hit subscribe below so you can get the next video as quickly as you can. Have a great day.